Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Today, we take a look at the recent released financial results of two stocks on the stock exchange, Sagicor Financial Corporation for its first quarter ended March 31st, 2017, and Massy Holdings Limited for its 6-month period ended March 2017 as well. Sagicor's stock price would have advanced just around 17% year to date, while Massy would have declined around 1%. Let's take a look first at Sagicor. And for the period ended, Sagicor delivered earnings per share on a fully diluted basis of 29 cents, which was comparable to this last period's earnings of 29 cents as well. In terms of diluted earnings per share from continuing operations, there was a 13.2% increase from 26 to 29 cents. So therein being some discontinued operations which did impact performance for the quarter. Total revenues were up just around 7%, while total benefits and expenses also increased around 7.2%. Profit from continuing operations increased around 14.8%, while net income overall rose just around 5% from 150 million TT equivalent to around 158.4 million TT equivalent. In terms of segment performance, there has been some notable changes. More so at the top of investors' minds, being that Sagicor Life has actually taken over, or Sagicor Jamaica rather, has actually taken over Sagicor Life in terms of the main contributor to net income from continuing operations. And here we can see Sagicor Jamaica has moved from 106.6 million TT dollar equivalent to 137.2, while Sagicor Life would have moved from about 115.5 million in the opposite direction to just about 88.1 million TT equivalent, and that could be a sign of things and developments and positive drivers occurring in the Jamaican market. Let's hope that trend continues in the Sagicor Jamaica case and that some arrest of any decline in the Sagicor Life segment takes place also. So how does Sagicor stack up versus the competitors? Well, on a price earnings basis, it trades at about a trailing price earnings multiple of around 7 times, which is below the sector average, excluding NEL, of around 11.2 times. On a market-to-book value basis as well, it's below the sector average of 1.25 times, trading at around 0.75 times. And in terms of dividend yield, it does offer a reasonably attractive dividend of around 3.76% versus the sector average of around 3.2%. Now, importantly, Sagicor declares its earnings in US dollars, which provides, and although it pays its dividends in Trinidad and Tobago dollars, it does provide somewhat of an implicit hedge against any deterioration in the TT dollar. So on that basis, we continue to maintain our buy rating on Sagicor. Turning quickly to Massy. Massy delivered for its 6-month period ended March 2017, a 2.4% increase in earnings per share from $2.53 to $2.59. And this was driven by a marginal increase in revenue of around 1.5%, with operating profit overall declining by 2%. In terms of the major driver of the improvement, it came in the form of share of results of associates and joint ventures, which swung from a loss of 9.6 million in the prior period to its current 30.7 million profit. That's a change of around $40.4 million. Tax expenses were marginally higher from 32 to 36%, or a $13.7 million increase, with an overall increase in profit for the year of just about 1.65 million. Looking at third-party revenue by segment and in terms of drivers, not much changes here for Massy. Integrated retail continues to account for just around 58% of total revenues, while the automotive and industrial segment accounts for just around 20% of revenues as well. Switching quickly to profit before tax by country, and there has been some notable change here. The Guyana, Eastern Caribbean, and Jamaica segments all experienced at or near double-digit growth. This contrasts to the Barbados and Trinidad and Tobago segments, which were below double-digit growth, but importantly, they account for about 70% of total profit before tax for the group. Therefore, it will be important to the group for their diversification initiatives, the most recent being the acquisition of additional car dealerships in Colombia. Let's see how that pans out for the group's performance going forward. So at a price of around $50 or thereabout, Massy trades at a price earnings ratio of around 10 times and offers investors a dividend yield of just around 4.1%. So on the basis of relatively attractive valuations, but tempered by some level of uncertainty in their major operating territories, that is Trinidad and Tobago and Barbados, Bourse maintains a neutral rating on Massy. And finally, last week, the Board of Directors of TTNGL would have approved the sale of 40.248 million shares of TTNGL Class B shares to the market, which are currently owned by NGC. So the market and investors, of course, anxiously await new details on pricing and allocation methodology for this additional public offering, which should be imminent. That's it for this week's edition. For more information, give us a call at 226-8773 or 2Bourse. Email us at invest@boursefinancial.com or visit our website at bourseinvestment.com. Have yourselves a wonderful investing week. This has been the Bourse Report.